Thanks for coming here, everyone, and watching our show. We are the Nicole and Craig Show live-ish coming at you. We've got Scott Swinford here. Scott is going to help us. Scott, probably, I don't know if I'm being safe in saying this, but I think you do more VA loans in our area than any other lender.
We do quite a few.
I don't know. I just pissed off like half the lenders that watch the show.
Probably.
Yeah,
we do quite a few, but not all of them, obviously.
Right. But, here's the thing. We're in a very strong, fast-moving seller's market right now, and I'm hearing from agents at our company and other friends and stuff like that they're having a harder time having VA offers accepted, and we are here to bust a couple myths. That's a tough thing to say. Myth busting. Yeah, I should say it the other way. Yeah, we are here to bust some myths. I'm going to do it again. I got the TH sound perfect. I got that. I nailed that. But anyway, so Scott's going to be here. Scott, if you want, you could tell us a little bit about your company, how long you've been a mortgage broker. I know most of the time, Nicole and I don't do that, but I think for a guest, we have to do that, I think.
Yeah, I guess.
So Scott, tell us who you are, buddy.
Well, thanks. Yeah, again, my name is Scott Swinford. I'm the Indiana branch manager for Hancock Mortgage here. I've been doing this about 16 years, I think, now within the mortgage industry, and it's a new and exciting thing every day. I'm sure, just like in the real estate industry too.
Yeah. Mm-hmm.
So we're enjoying it, and you're right. I really enjoy working with our veterans, not because of their service and sacrifice. And thank you to all of our veterans that are out there, including yourself, Craig.
Thanks.
But it's a unique loan, and so you need to kind of understand there, and that's what I've spent a lot of time the last several years of really learning that particular program to make sure we're doing it right.
Excellent.
Awesome. Yeah, I think VA, especially when you're a newer agent and you're just starting out, like you don't understand all the nuances of the loan and things that the seller has to do and whatnot. So I think for this, with the market being so tight, here are some myth-busting tips that you can use to talk to listing agents regarding a VA buyer. I think a lot of people are getting beat out right now by cash and conventional. So this is a good way to kind of talk about the benefits of using a VA loan.
Okay, and Scott, I like Scott gave us a nice flyer here that's got some.
It's our show. It's our show today.
It's going to be our show, and I like even the first 6 myths that we're going to bust. So I think we'll go with that format if that's all right with you. And then any other tips and stuff, we can get those as well, or as you see fit as we go.
Absolutely.
Yeah. All right, so our number one that they're talking about, and we're not going to do our normal going backwards thing because I didn't think of it until right now. So VA buyer, they're putting zero money down, so they're not a strong buyer. That's the myth I've heard. Scott, bust it for us.
Well, the question is, Craig, why are they allowed to put zero money down? And it's because you sign your name on that blank check where you're willing to give everything up to, including your life. So the government says, we're going to put a loan program out there for these folks who have done that, who can now get into a home with no money out of pocket. That doesn't mean that they always do. We still have folks who use down payments on that. But they have the ability to do that through their entitlement, because that's what we call it, as VA entitlement, and their eligibility. So the entitlement says essentially how much they can borrow, and then their eligibility is whether or not they are eligible for the program. And once you have your eligibility, again, in most cases, you can buy a VA home if you've not used any of your entitlement previously for, it's not limited anymore. I have a friend of mine that did a $1.2 million loan for a veteran with zero money out of pocket.
Wow.
No down payment required. Wow. But they're not weak borrowers whatsoever. Again, I was geeking out a little bit last night and looked up some numbers. The average veteran median assets is over $17,000. Median household income is about $73,700 versus about $59,000 for the average non-veteran. So they have the ability to do that. And again, not all of them do. We work with some veterans who really don't have a lot, but for us, they are usually as well qualified, if not a little bit better, than most of the average borrowers out there.
And I think that's a good point. I think that's a good point in saying that, your down payment doesn't doesn't make like, are you a good buyer or not, right? Because I definitely think that that is a myth in the industry, and that the VAs or veterans are actually just using the benefit that they have gotten for serving the country. So, yeah.
I agree.
Excellent. Okay, we're going to move on to our number 2 topic that we wanted to cover, and that's VA loans are harder to get through underwriting, and we're going to leave the appraisals themselves to our last topic. So besides the appraisal, talk to us about how the myth that VA loans are harder to get through underwriting.
Well, kind of look at it this way. So for conventional underwriting and FHA, there's a big book that says what you can do and how they qualify. For the one for VA, it's more of you can't do this. So it leaves it much wider open. And actually, through the VA loan program, our veterans are easier to qualify than they are through conventional or FHA.
Excellent.
Cool.
Okay.
Good to know.
And Scott, you do other kinds of loans too. So you have a unique perspective where, you see the VA side of it, and you see the FHA side of it, and you see the conventional side of it. Is that safe to say?
Yes.
Okay.
We do all types of loans, including USDA, which is another zero down loan. But you're limited to a certain geographic area. You can make too much to qualify for USDA, where VA, again, there's no restrictions like that.
Excellent. Yeah. We're going to talk about USDA, Scott. We'll do that some other show.
But just as a comparison,
I know, I'm
because
just
they
kidding.
are zero down payment loans.
Yeah. Okay. We're going to move on to our number 3 thing. Anyway, you heard Scott say it. He does a lot of them. They're not harder. They're easier to do. So, okay. VA loans take longer to close. I have heard that, if a lender says, hey, we can close an insured conventional or conventional in 30 days, but we need 45 days for an FHA or VA. I have heard those dates before. And even when I first got started in the business, we used to write our contracts usually for 45 to 60 days, depending on what it was. Well, I don't know if we go 60, but it was always at least 2 weeks more for FHA or VA. And I don't know, that's just the way I was trained. So I don't know if that's I know things have changed in the last 20 years, but anyway, what about today?
Well, and things have changed within the last 6 months even with as busy as the mortgage companies are, it is extending those closing dates. But with VA, again, we talked a little bit about the appraisal, and we can go into that a little bit deeper if you'd like in a little bit, but generally the appraisals come back faster, as well as the underwriting is smoother because there's generally not as many conditions. So we can get them done much faster. Oftentimes it's a week before on a closing for a VA loan than what it would take us to close an FHA or a conventional loan. Just because of the ability to go through a smoother underwrite, the appraisals, and the whole type. That said, it has a lot to do with the lender in particular. So some lenders are just all backed up, or it takes them quite a while. Where I can personally, I'm getting things out of underwriting in under 24 hours, but it's because of the way that we're staffed. And so you can't judge us by that, so it's not industry-wide. But they should generally, as compared to FHA or conventional, they should be easier to close a little quicker.
Awesome.
Okay.
Awesome. I don't really have anything to add to that, I don't think.
No. We'll move on to number 4 then. And this is something that I'm glad was on this sheet, because this is something that even I had the misconception of. I know there was a time where the seller would have to pay the VA funding fee for the borrower if they wanted. They had to pay that. I know that is not the case anymore, but I was under the impression even right now so I know they don't have to do that anymore. Okay. Yeah. I was under the impression that the seller still has to pay for a pest inspection.
Yeah,
and Scott enlightened me the other day that is not always the case anymore. But could you shed some light on that for everyone else, Scott?
When did that change?
Well, it's the 1% origination rule. So there are some things that the veteran is not allowed to pay for if the origination is more than 1%. So for instance, again, let's take about a $200,000 loan. If I'm charging $2,000 for origination, then the veteran cannot pay for that, because that even $100 pest inspection would put it over the 1%. If I'm charging $1,500 for instance, and just using numbers, and then the pest inspection is $100, that's still under 1%, so the veteran can pay for that.
Okay.
So I guess what's your suggestion then to realtors? Because normally if I have a VA loan, I write it in automatically to the contract for the pest inspection, because you got to write it in your contract originally, or else you got to figure it out later, and that's not very much fun.
To have the seller pay for it? Mm-hmm. Thank you. That's
Well,
why I say thank you. Because
I know. Then Scott doesn't pay for it.
Right.
Scott's company's not eating it. Yeah, I got
no,
you.
Scott's company doesn't eat it, but it's just one less charge that the veteran is paying at closing.
Well, and I get that, but if they don't have to pay for it, how do you differentiate that when you're like, do we need to have a conversation with the lender up front and see what their origination fee? That seems like we're going down a dark hole, right? So,
Well, to be in general, I think you should have a conversation with the lender prior to you
yes,
writing the
obviously.
contract on this.
Obviously,
yeah,
but-
and run those fees past them and ask the lender, should we put this in? Do we need closing costs? Although that's, again, it's a negotiation tactic for the agent. But do we need this? Should we write it up this way? What's going to be most beneficial for our veteran borrower and still be able to get the contract accepted?
and that's awesome, I think, for people that have been in the business for a long time that actually know finance and things like that. But for some of the agents that don't, or, are more seller focused or whatever, I think the big thing is, what questions do we ask? We want to stay in our lane, and we don't want to like get over in your guys' lane, right? So I guess my point is, like, do we just write it in the contract like normal? And, I don't know. Because obviously it can or cannot be paid. So it's like, I don't normally know an origination fee from a lender for one of my buyers.
Right. And again, have that conversation with them. Ask them if it's something that we need to have the seller pay for. And I've heard agents say, well, my seller doesn't want to pay the pest inspection. Okay, well, we'll make it work otherwise. If that's a sticking point,
Okay.
and again, kind of a negotiation tactic for the agents.
Mm-hmm. Okay.
And I think sellers need to stop freaking out about it anyway. Most home inspectors, it's an extra $50,
If
and
you do it
it's-
with the home inspection, though, that's
Right,
the thing. You
right.
guys all have to work together to make that happen.
Yeah.
Otherwise, it's like $200.
And that's, that's a great point, though, is we should act as a team.
Mm-hmm.
Yeah.
We really should, from the lenders to the home inspectors and the real estate agents,
Yep.
because we're trying to get to the same place.
Yeah.
And, what you said about kind of staying in your lane, granted, I don't know if you're Cubs fans or not, but use them because they're really the only team I know.
Yeah.
Is, Chris Bryant plays third, Anthony Rizzo plays first. You don't see them switching, but they're part of a team and they
Right.
make it work. And
Yeah.
that's kind of what we're going to do.
All right. Well,
Yeah,
there's something to add to that.
I try to train all my agents to stay in their lane. If you're not lending money, you shouldn't be advising your clients on lending issues.
I
It
get-
should be
Right.
letting the lender handle that.
And I
It's
get
not.
super mad when vendors don't stay in their lane. So I
Oh, yeah.
try to
Oh, yeah.
respect that boundary myself. So
Yeah.
yeah.
Oh yeah.
And we do appreciate that.
Yeah.
We honestly do. Because, again, with these myths and misconceptions now, some agents may be telling their buyers or their sellers things that are not true. So,
Sure.
again, that's why I like the teamwork concept.
All right.
Excellent.
on.
Okay. Here's another one that I think I'm going to get educated on in the next 10 seconds or so here. But a VA borrower can only have one VA loan. That was something that I was told, that you get your eligibility or your home certificate or whatever. If you use it on your house, you can't go buy another house with it. You have to release it or something like that. So you can only have one at a time is what I
For the
thought.
record, I actually knew that wasn't true. So I
Okay.
did something that
Good.
you didn't.
Good
Just
job.
so you
Yes.
know.
Okay.
Thanks.
Wow. Well, let's see if I can teach Nicole something new then. So, yes, you can have more than one VA loan at a time, but it depends upon how much entitlement you have
Right.
remaining.
Yep.
Okay. So the entitlement, essentially, VA backs 25% of the purchase price. So, for instance, if you're buying a $400,000 home, the VA is backing that with $100,000 out of your entitlement. So a couple of things can happen. One, you would sell that home and you could get that entitlement back.
Yep.
So it's restored. You can pay off your home where you still own it but have no mortgage, and you can get a one-time reinstatement of your benefits. If you have, say, a foreclosure, then whatever the VA lost, they hold against you. So if you were foreclosed on that loan, their 25% they will hold, but generally you still have your remaining entitlement. So right now, the county loan limit, which is what it goes by, is $548,000. So let's just say, let's use it's 480, which is what it was last year. So it's the VA has $120,000 that they're essentially giving our veteran for entitlement. So if the VA from a foreclosure or there's a short sale loses $30,000 on that, they still have that 120 left. So now you have 90,000 of your entitlement remaining, and because it's 25%, so 90 times 4 is 360,000. So even with that foreclosure on there, that short sale, you can purchase home between $144,001 and $360,000.
Cool. Yeah.
So, and you can also use it. Happened to a friend of mine who purchased a home with his VA benefit, had met a girl, they got married, they bought a new home, and he was able to keep both of them because he had enough entitlement to cover both of the loans.
For sure. Yep. See, I knew that one already.
Excellent.
And I knew about the entitlement. Thanks.
Good.
Thanks.
Well, and this is why and again, if you have a question or if you've been told something contrary to what we're saying, always defer to your managing broker. Whatever your managing broker says, talk to them. If they, a good managing broker, which I believe most of them are, they're going to, if they don't know the answer, they're going to call someone like Scott, or they're going to call someone and get the answer. So do not take our show for, the gospel, so to speak, on how to do things. Right. Talk to your managing broker, whatever you guys do. We're trying to give you some tips. And what we see a lot of times right now in this dominant seller's market that's really crazy for us, we see sometimes it's harder for a VA buyer to get the loan accepted or get the offer accepted just because of some of these old misconceptions. And being a veteran myself, I guess I just like opening, I like figuring out some of these things. So if one of my sellers gets an offer that's with a VA borrower, they don't have to be scared or anything like that. So,
I think that kind of rolls us into number 6, because I've gotten a lot of questions from my team about number 6 here recently. Not just VA, but FHA and whatnot, right? So VA appraisals are tougher. I think that is a misconception, I think, in the industry right now, in general, that, the appraiser is just going to pick it apart and it is what it is, and, that kind of thing. And I don't necessarily think, they're going to call Tidewater. I don't necessarily think that stuff is true. So what do you think about that, Scott?
Well, the VA appraisals are tougher in one small aspect. And what that is they have to meet what I like to call the 4 S's. So the property has to be safe, secure, sanitary, and structurally sound. So it's much like when you're looking at an FHA property, if there's peeling paint, broken windows, they have long stairwells to the basement and they don't have handrails, things such as that. Then the VA appraiser is going to call that out because it's a safety issue.
Peeling paint before 1978. Go ahead.
Or again, like you said, the peeling paint, or if the water doesn't run in the bathroom, those are things that they're going to call out because they really want the veteran borrower to be able to move into the house and it be ready to be occupied. Now, there is such a thing as a VA rehab loan. But the concept is they want the veteran to be able to walk in there and have a safe, sanitary, structurally sound home to go into.
Sure.
And it's really not much different than FHA.
You're right. So. Yeah. And I think that's the big thing is just, that's kind of how I train my agents is remember health and safety. Like, is there mold in it? Probably not going to pass unless we do the repair because that's a health and safety issue. And so a lot of the things that Scott hit on, the railings, stuff like that. A lot of that all is just health and safety. Those are the most common things I think we see now are peeling paint and railings. Because I think in the past couple years, it just really, they have not been picking like they have before. It used to be all kinds of different things. And now most of it's handrails and peeling paint. So if you have a listing, make sure you're doing handrails and peeling paint. Before 1978.
Yeah, I would suggest to the agents out there, both listing and buying agents, to Google VA minimum property requirements. If you Google that, it'll give you all of those things that they look for to meet it. So if you have any questions, you have it right in front of you to know whether or not it's going to, if there's going to be something that will be called out.
Oh, Scott, realtors don't Google stuff. We're just gonna call someone until someone knows the answer.
Basically. Oh, you don't know? Okay, let me call my next friend and my next friend.
Do you
and my
know
next
anyone
friend.
who would know? We're like, sir, this is McDonald's. I'm like, I don't know. Who do you guys serve everyone, right? Someone bought some
Peeling
food.
paint.
Someone knows
Hey,
the answer.
what?
Can you put a sign in the lobby? Like, what do we got? Okay, what about, so I'm seeing a lot of also this Scott, and this is a bonus. This is a bonus question, I think. We're seeing a lot of offers come in above purchase price, right? Okay, a lot of sellers get scared about that, especially when it's a VA or an FHA buyer, because they're afraid that if they're already over the asking price, it's likely that the appraisal is going to come in shorter. With a conventional buyer, the thought is, well, maybe that buyer is a little bit more liquid, so they can basically add an increase to that.
Yeah, they can reduce the amount of money they're bringing to make up the difference for appraisal price.
Now, what about now? And I know a VA borrower that has more money to put down or something that might not be a problem for them. But I know that the FHA amendatory clause and things like that, where it says very clearly that if it does not appraise, the borrower gets their earnest money back and all that kind of stuff. Are you seeing anything creative that you can share, I guess, on how someone can structure a VA offer to be competitive with someone who's paying cash or, well, forget cash. I mean, that's a tough one anyway, but let's just say a conventional or because the perception is the conventional ones are easier.
Right. Well, which they're not. I think as we've talked about, they're easier to get through. The appraisals are a little bit quicker. The underwriting is not as strict. But what you're talking about, that the VA amendatory clause, I actually have it here. And again, I was geeking out a little bit, but this is something that I hear from a lot of agents. They say, well, they have the VA clause in there, so they can't pay over the appraised price. And that's not correct. Basically what it says is that you cannot hold them to the contract if the appraisal comes in short. However, they have the ability to do it.
So it's the same thing.
That's with any buyer.
Yes. So it's the same. Yeah, they can. Okay.
So people are reading the FH or the VA amendatory incorrectly. Basically, it's kind of what you're saying.
Right. Yeah. Some of them are saying, well, if the appraisal comes in low, then we have to give them their earnest money back, and we have to not accept it. But that's not the case, because the VA borrower can still
move forward. Yep, just like any regular buyer.
Right.
Okay.
Now, and then lastly, you shared a couple other tips. There were some awesome tips that the average VA buyer, like you said, they're more liquid assets than the average home buyer. Median household income is higher, like you said. What else was it? Credit score is, I don't know if that's higher or if that's average. I don't know.
It's a little bit higher than the average borrower. Usually, if you're not going to VA, we'll see the higher scores in our conventional borrowers, because it's not only with conventional is it priced according to score, but if they're putting down less than 20%, the mortgage insurance is based on their credit score too. A couple interesting things though is, and I want to tell you, there's 3.9 million veterans who have a service-connected disability. So, and 1.2 million are greater than 70%. Well, the interesting thing about the service-connected disability is with a VA loan, they have what they call the Upfront Guarantee Fee. And we talked about that, where it can either be paid by the buyer at closing out of pocket, but generally it's just financed into the loan. And they have the first-time use versus subsequent use. But if you have a 10% or greater VA disability, a service-connected disability, they waive that. And there is no monthly mortgage insurance that's included on that. So they essentially they can borrow 100%, and it's simply there's no other fees included. There's no monthly mortgage insurance included.
So basically, I need to refi my own personal mortgage. Right. Okay, good.
But to give you a comparison, I had a client in my office the other day. He's a Marine Corps veteran, and he said, "I'm thinking about going conventional because I'm having a hard time getting my offer accepted." So among the other things that we were talking about, much like what we were speaking about today, I ran the conventional versus the VA for him and what he wanted to put down. And I said, now you're taking unconventional more money out of pocket, and he has some reserves. I said, but you're spending the money on a down payment, and by the time you add in the interest rate of a conventional loan versus a VA loan and what his credit score was, and then the monthly mortgage insurance that he would be paying, that reduced the amount that he could purchase by about $25,000 or $30,000 of his purchasing ability.
Yeah.
So when we look at it that way, if the veteran is not putting down more money and they have to meet an appraisal, or if they choose to, if they choose to go up another $10,000 or whatever that number is, if the appraisal comes back low, generally they have the more of an ability to do that because they don't have a down payment.
Oh, yeah. I see what you're saying. Mm-hmm.
Excellent.
Yeah.
Well, Scott, any other tips or last-minute tips for us? Or, well, go ahead. I'll let you answer that one first before I stack 8 questions.
Yeah, one thing that I really would like the agents to know about that are watching this, and for those who are watching this, I think this is a great opportunity. I've watched Craig and Nicole before. Good information. So
Thanks.
Thank you.
Thanks, Scott.
Sure, is something called Tidewater.
Yep.
And I think
I mentioned it
you
earlier.
both- yeah.
Yep.
And essentially what it is for the agents, it's really the only opportunity you have to ever influence the appraiser for value.
Yep.
And what it is kind of in a nutshell, is the appraiser goes out and does the appraisal, and before they ever send the appraisal in or give a notice of value, they'll reach out to the 2 agents. And let's say you guys are you're a listing agent, you're a selling agent, I'm the lender. They'll reach out to us as a point of contact and say, I'm not coming up with that number. I'm not coming up with the number for the purchase price. Help me out here. And so you have 48 hours to provide 3 comps that should be apples to apples comparisons that are local, that are close by, what they can use. And there are some times they'll say, I didn't see that one. I didn't know. They have to be sold properties, not ones that are pending or for sale. And you have 48 hours to do that, and then they will come back in with the appraised value, or they'll say, this is what I feel it's worth, but they have to comment on that. So how many times can you say, yeah, I came up with this number because I used these comps, and that you have the ability to influence that. But if that doesn't work, there's a couple things you can do, but the other one is a reconsideration of value. And that is where my underwriter, who's what they call a SAR, a staff appraisal reviewer, can go to one of the VA SARs and say, the appraisal came back a little bit short, but we really believe that it's worth this amount. So we'd like you to be able to give 100% financing for the purchase price, even though it's higher than the appraised value. So there are some options out there.
I've done that before.
That we can work with, yeah.
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 I have not done that. Yeah, that's pretty
It's a
cool.
lot of work, but
Yeah.
you can make it work. Yeah.
Yep.
It is a lot of work, and that's where the VA really comes in and says that they want to do everything they can to get the veterans into homes.
Yep.
I like it.
All right. I think that's.
Well, Scott,
it.
where can they? Because you do a show on YouTube too, don't you? Or Facebook? I see you. You're doing. You do what? I think 1 or 2 different weekly shows. I think, right?
Yeah. My big one is every Friday. We do a Red Friday video.
Yeah.
Red meaning remember everyone deployed. Talking about our active duty service members, National Guard, reserves, and some of the local things that are going on within the veteran community, what the veterans might be interested in, as well as the supporters who want to help out the veterans.
Cool. That's awesome.
Excellent. All right. Well, thank you, Scott, for coming here and enlightening us and all of our viewers out there. Don't be afraid of VA offers. Don't be, talk to the lender. If you have, here's what's so important on this. If you've ever went and told your client that, a VA offer is not good or it's never going to get accepted, if you can't say things like that. I mean,
Right.
Talk to your managing broker. They're going to strongly encourage you never to use that kind of terminology, but if you haven't firsthand called and talked to some lender that does that, or, then in my opinion, you're not doing everything that you can do to help your client out.
Pick a lender that you've had a good deal with and make them your source of information for all your finance stuff. That's the only way you're going to learn it. And as a good agent, you should have a good basic finance foundation to where what Tidewater means and other things. Some of that's going to come with experience, but that's going to help you, especially in this hard time where negotiation, you need to be a master negotiator right now. And if you have a VA client, it is VA. It is what it is. So you need to figure out how to get them home, and knowing what the myths are and selling the benefits to the listing agent and things like that. That's part of our job right now. And it just is what it is. So,
Yep.
So
let's get some more VA offers accepted and go have a great week.
Yep.
Absolutely.
Anything else?
Thanks, guys. Thanks for coming on, Scott. See you next Friday, guys.
Thanks for the invite.
If you know a veteran borrower, you could, or a veteran friend that's looking to buy a house, you could tag them in the comments or whatever.
Yeah, for sure.
I'm sure there won't be 4,000 real estate agents,
Being like, hi, what's
direct
going on? What's going
messaging
on?
them.
And Craig, Nicole, I don't ever have a problem answering questions for agents. And even if they're working with another lender and they're getting hung up on something that's VA related, feel free to call me. I'm not going to try to steal the loan away from them. But the idea is, much like we said earlier, we want to get our veterans into homes.
For sure. That's awesome, Scott. Thank you.
Excellent. Thank you. Well, everyone, thanks for watching. Thanks for whatever. Have a great week.
Bye, guys.
Have a great weekend. Thanks, everyone. Bye.